that off just in 1 second. But I just want to thank everybody for joining together FintechNI and NI Cyber. NI Cyber is the name we've chosen for the cybersecurity cluster, which represents companies in Northern Ireland. We're a cluster of organizations based here developing world-leading cybersecurity technologies for customers worldwide. We're hoping to help promote cybersecurity as an industry and as a career, and to help our members work together to achieve brilliant things. We've got a great panel of experts here today, so thank you to them. They're going to be sharing their views on a variety of topics. We're very grateful to them all for coming along. So I'll pass over now to my co-chair, Alex Lee from FintechNI. Thank you very much, Alex.
Well, thank you, Simon, and sorry for the technical difficulties that I'm not with you on the screen, but I am definitely with you in spirit. So as Simon says, I'm one of the directors at Fintech Northern Ireland, which is an industry association made up of participants in the local fintech ecosystem here. So we're a not-for-profit organisation, and quite simply our goals are firstly to position Northern Ireland as an attractive destination for fintech based on the unique skills and clusters of experience that we have here, and secondly to collaborate with other fintech ecosystems both nationally across the UK and internationally to support our member firms really in any way that we can. Our member firms come from all corners of the fintech ecosystem, and great to have a couple of them with us on this webinar today. But we have fintech startups and fintech scale-up companies. We have technology providers who are targeting the financial services sector. We have incumbent financial institutions who are embracing digital technology. We have some of the education and skills providers locally, so some of the universities, accelerators and incubators. And finally, we've got the fintech funders, so the venture capital firms and other providers of finance to the sector. So as you could say, as an organisation, we're a pretty broad church, Simon. And again, thank you for the opportunity to co-chair this session with you today.
Brilliant stuff. Thanks very much, Alex. So what I'd like to do, if I may, is to introduce the panelists that we have here. I'm going to do a very quick introduction, and then I'll let them kind of share their thoughts on various bits and pieces. But firstly, I'd like to introduce Alison Donnelly, who's a director of FScom. Alison is a payments policy expert with an in-depth knowledge and understanding of the payments and e-money regulatory landscape from 3 years as the FCA's e-money policy lead, and in her current role providing compliance advice to significant established and startup fintech companies. Thank you very much for joining us today, Alison. Then we've got Cormac Quinn from LoyalB. LoyalB is a data-driven loyalty platform that helps retailers attract and retain the best customers. Leveraging open banking APIs, they replace outdated loyalty card systems with a simple bank-linked app for consumers that offers them an effortless and personalized shopping experience. It allows LoyalB to democratize access to the tools and technologies that only a few large brands have been able to access in the past. Unfortunately, you can't see Cormac. We're having, again, a few technical difficulties with Cormac's webcam, but I promise you he's here, and he's going to share some of his thoughts on how his firm has got to the stage they are now. So thank you very much. And finally, we've got Simon Cole, who is CEO of Automated Intelligence. Automated Intelligence empowers organizations to take control of their data so that they can take control of their future. They have a cloud-based solution, AI Data Lift, which is specifically designed to provide highly regulated financial services firms with data insight, risk identification, and compliance reporting. So what I want to do is actually first, if I may, to address Alex again. I wanted to ask the question, why is cyber an issue in fintech? And maybe Alex, if you had any thoughts on that to share with us.
Yeah, very, very happy to kick us off, Simon. Thank you. And look, I think cybersecurity is becoming an increasingly important issue, not just in fintech actually, but for any financial institution. And I would say it's now, it's a mission critical issue for any company in financial services. I think for me, there's been 3 key drivers over the last decade or so as to why it's risen in prominence and importance. I mean, firstly, we've seen the introduction of more customer-centric and technology-led user experience models in financial services. And in fact, most fintech companies are born out of providing a more customer-friendly onboarding and a more customer-friendly transacting experience than you would get in a traditional bank. you can open an account now at a challenger bank or a robo-advisor in a matter of minutes, whereas historically that would have taken you possibly a couple of weeks at a bricks and mortar based institution. But that's required the fintech firms to turn to automated solutions to conduct customer due diligence, including their regulatory obligations around know your customer and anti-money laundering. So, of course, all of that creates an increased cyber risk. I think, secondly, we've seen the introduction of open banking back in January 2018, and I'll let Cormac talk more about that later. But that's allowed for now these open flows of customer data between different institutions, and of course, not all of those institutions are regulated in the same way that banks are. So, the ability to protect that data, be it in transit, be it stored in the cloud or wherever that customer data is being used, it is critical because of the cyber risk of that data. And then I think finally, we have seen over the last decade or so this increasing adoption of digital payments and the shift to digital banking. And we've seen a particular acceleration of that recently during this COVID-19 crisis, where of course, contactless payments are now the norm, and online shopping is now ubiquitous. So again, there's an increased cyber risk associated with that. So that's a long-winded way of saying that's why I think cyber is such a mission critical issue for fintech companies right now.
And absolutely, and from the NI cyber side, I completely agree. We have seen so many organisations now selling online, and that has driven a massive increase in in online activities, in financial services activities. Therefore, over the last week or so, we've seen some of the issues with Wirecard presenting themselves to the fore, and I'm going to pick Alison's brain about that, about things to do with that sort of thing in a couple of minutes. Before I move on to that, I wonder if I might ask Cormac and have a chat with you, Cormac. Your firm was a very early adapter of the open banking API protocols that Alex mentioned there as a key driver to cybersecurity. Could you give us an idea about the process you went through and about your relationship between regulatory requirements and cybersecurity?
Yeah, absolutely, Simon, and thanks for having me on today. So, I mean, where to start with the process? Yeah, we were a very early adopter. So early, in fact, there was no real playbook to follow. I think the API spec was still being created as we were going along, and I know it's still being improved as we speak, although it's a lot more mature now. And the regulations were new. Not many had an AISP license and an account information service provider license. And in fact, when I started OIV, I didn't even know what an AISP license was. I just knew that there was these cool, new, innovative APIs, and that we wanted to use them for our use case. Locally, fairly early on, we were actually introduced to FScom, who are on the call, and they give us a steer with regards to the FCA and the regulations. And actually, then they helped us, become regulated, become authorized in the end. So that was a massive, massive help on the regulatory side of the process. And then, of course, there's the technical side. And early on, I joined Slack groups and communities to try and learn about this as it was being developed. They're mostly London-based, so I had to go over a few times, including to an open banking hackathon for a weekend, and that sort of really accelerated the team's knowledge as well to allow us to actually build and integrate with the banking connections. On the relationship between regulatory requirements and cybersecurity, however, first off, we knew from the outset that whatever we were building with open banking APIs had to have security at the forefront. If we had a serious data breach, that would likely be the end for us. Contrast that with maybe a more established firm who have had breaches, but maybe moved past it at some point. So practically speaking, for us, in the early days, we had a security consultant come in, review our architecture before we started building it. And we always ensured that we thought about security when building our own APIs. So that, that was helpful, when applying for our license to the FCA as well, because we could confidently, describe the measures that we had taken to ensure that security was up to a high standard. Although, having said that, I actually do think the regulations could be stricter with regards to cybersecurity. The regulations are great for consumers, and as long as they make sense and are appropriate to the risks and the business type, I think that they're a great idea. For example, requiring a startup like us to have a full dedicated security team, isn't really realistic. But requiring us to maybe have an external pen test or security review once a year, I think that should almost be the minimum, and I think it's great for consumers. And we did actually, hope Simon you don't mind me mentioning, we did actually have an external pen test. Vertical Structure did help us out with that, and test our systems, which gave us great peace of mind. From the outset. And out of that, there were only a few minor issues, but very useful comments and suggestions that we improved upon. So yeah.
That's brilliant, and Cormac, that a lot of that stuff is fantastic, especially from a non-Irish perspective, in the fact that a lot of this stuff was so London-based, and the fact that you had to travel to go and go and learn this. And my guidance or my thoughts on that would be, let's do more of that in non-Ireland now, and what can we do as a cluster to bring all those things together and share your experiences out to the world. You're one of the most experienced people on this in Northern Ireland at this point, so let's do that, and I really appreciate you coming on today to discuss that. I also think it's interesting to talk about the fact that you would like more the regulations to specify more, and I think there's changes coming up in some of the banking and payments industry that maybe Alison might touch on in a little while. But Alison, what I wanted to ask you, if I may, is to understand that from the point of view of suppliers. So suppliers are seen as an area of particular concern to the FCA, which has recently obviously been highlighted by some of the issues with Wirecard over the last little while. What, in your view, should firms be doing to ensure the security of their suppliers and their partners?
Thanks, Simon, and delighted to be here on this with you. And also, I think, just to go back to what Cormac was saying, it's really important to remember the context of open banking, which, yes, came into play largely in the UK from 2018, but of course, firms had been going into protected environments in banks to scoop out data and initiate payments way before that. It wasn't very common in the UK, and to be fair, it's still really only on the cusp of beginning to get. We're getting more familiar with it, but in other parts of Europe, for instance, a few years ago in the Netherlands, 55% of payments were being made through payment initiation service providers, and they were doing that through screen scraping, and there was a huge battle in Europe when it came to these providers, and banks were in general absolutely against them. So they were arguing that we do not want these third parties coming into our secure systems, and we don't know what they're doing in there. The customer might not even really appreciate or understand that they're in there, and what might they be doing once they're, do they definitely leave when the customer leaves, and all that kind of question. So this has to have been all framed in the point of security, and that's why the Payment Services Directive, the second iteration of it, brought them into scope of regulation. So the European Commission said, yes, we hear what you're saying, banks, but no, we know better. We're definitely wanting to open the market to competition. So what we're going to do is we're going to regulate them. We're going to know who they are. We're going to set them standards. They have to meet those standards. So whilst companies like LoyalB and the many other ones that have got registered and some have got authorised to do this, they've had to meet hurdles, they've had to meet security standards in order to get this privilege. And I think there's a sort of wider point that if any of them are seen to be failing, there's going to be a huge backlash, and there'll be many questions asked. So, as a sector, the whole sector needs to be alert and cautious. But to your question, Simon, you're asking about security of suppliers, and yes, again, it's another area of concern and regulation. We see a huge range of interconnectivity and interdependency, and there's a huge risk there. The FCA were consulting on proposed rules and guidance on operational resilience when the coronavirus struck, and so the consultation has been pushed out until October, but the changes are expected to be implemented early next year. Again, there will always be a potential of concentration risk, and I think that was very much highlighted by the backlash of and the fallout from the suspension of the UK entity, the UK Wirecard entity, because we saw customers who were stuck. They could not get access to their funds, and there was no way that there just didn't seem to be some kind of solution where the funds could be transferred on their behalf without Wirecard or whatever. But it just goes to show the importance of, at the very least, understanding and identifying where the dependencies are and taking steps to mitigate as soon as possible. So the rules will be coming in, and as always, compliance consultants recommend that you get ahead of the game and make sure that you are prepared for it before it becomes a requirement.
Yeah, that's brilliant. Thank you very much, Alison. That's a very complete answer there, and especially going back to Cormac's points as well. I think that's very useful. The move from screen scraping to these open banking APIs, I think have been really useful in the fact that now we don't just have some early technology that we think works or differentiates numbers incorrectly or whatever. Now actually we've got direct interaction, but obviously from a cyber perspective that does add in a layer of risk. So that's brilliant stuff. Thank you very much, Alison. Simon, I wonder if we might move to you, if that would be okay, just for wanted to ask you about cloud services in use in the fintech world. Obviously, they're used especially by startups who are kind of coming up in the world, but also extensively now by an awful lot of other organizations in the more traditional sector. They're a particular area for compromise and a particular area of great usage. But what guidelines and processes should firms be using to protect their assets when they're using these services?
Thanks, Simon. It's great to be here with you on the webinar. I think for any organization, it's really key to know your cloud. If you're going to put your data in it, or you're going to put your customers' data in it, you have to really understand that cloud, understand its limits, and its scalability, and every other aspect. Security is a really key issue when it comes to managing data. And this is even more true if you're managing somebody else's data. At all times, you need to know where that data is, you need to know who has access to it, and you need to be able to review any of that at any point in time. When we look at the cloud providers available, people like AWS, Google, Azure, Microsoft, they have a real advantage here in terms of security, given the literal billions of dollars that they spend a year on security. It doesn't mean that it's necessarily always perfect, so you just can't rely on that alone. It's very important to manage that. We had a great example. Our platform is purely based on Azure. And when we set up AI and put our data lift platform in Azure, we wanted to test the extent of it. So we, at one point, put a database on with an open IP address on it, just to see what would happen. And literally within about 48 hours, the data was encrypted and the message left saying, if you want your data back, drop Bitcoin into this address. And the speed with which people are scanning and looking and trying to expose data is quite frightening when you see it. Now, obviously, that was a test, so we were fine in that regard. But it is really, really critical to manage that security, especially if you're building on one of those clouds or you are using services. You've got to really understand that services security perimeters, what they've put in place. We spend a significant amount of money, on testing, and especially pen testing our own platform on top of the underlying platform from that security perspective. So it's really important. But beyond security, we got to think about the data that we're storing. We got to think about, how it is accessed, how it is used, how is it stored. Do we encrypt it at rest? In fact, if we're not encrypting at rest, we need to be doing things like that. There are some absolute staples that people should be doing in terms of protecting people's data. And sovereignty is also a big issue. What rights do you have to store the data? In which cloud and in which geography is that data being stored? Do you have permission from the user, from the data owner, to do that? What about processing of that information? Have you got permission to process it for the use that you're making of it? So there's a lot around security, but there's equal amount around just what is the data and how you're processing it. When you look at something like GDPR and the requirements around that for data processes versus a data owner, and understanding where you sit in that remit. We have a range of services that we provide to our customers, and in some cases, while it's their data, technically because of the way we hold the data, we're actually seen as the data owner, and that has liability implications and everything as part of that. So you do need to understand the data, understand your relationship to that data, understand your relationship to your customer, and making sure that you are using the cloud appropriately. We've had a few people where they've literally had to go out to their entire user base and get contracts updated just so that they could, in fact, store their data on the cloud. And when you're talking about, large government departments or, large financial institutions, that's a massive undertaking, but not one of those ones that people are having to really think about. So
yeah, they don't move quickly, do they, Simon? These oil tanker organisations. There's very different to someone like Cormac and Loyal B, who are maybe quite fast and reactive to some of these things, and we'll maybe touch on that in a second. Brilliant answer. Thank you so much, Simon. Really appreciate that. Alex, I wonder if I might come back to you with your FintechNI hat on. The Swiss reinsurer, Swiss Re, has called for mandatory cyber resilience or IT audit assessments to take place and to be shared with regulators and insurers. We already have financial and sustainability reports being published by firms. So what is your view on publication of these assessments in relation to the financial services and fintech firms?
Yeah, thanks, Simon. Well, look, I think there is mounting pressure on companies, not just financial services companies, I think all companies, for much better disclosure on how they're managing cyber risk. There's pressure coming from their boards, there's pressure coming from their shareholders, but also importantly, there's pressure coming from their partners. And as Alison was talking about, the Wirecard issue, and we need to be clear that was an accounting fraud, not a cyber fraud, but it's proven how interconnected the fintech ecosystem is and how many other fintech firms were reliant and dependent on them. So I think there's growing pressure for more transparency about how companies are managing cyber risk. So therefore, look, I do think it's inevitable that it will become a regulatory requirement, not just to prove that you've conducted a cyber risk assessment, but actually for you also to make that information publicly available. I think it will probably happen in financial services first, not just because it's already one of the most highly regulated industry sectors, but as we all know, it is the industry sector most targeted by these so-called bad actors. So I do think regulation is coming.
That's brilliant stuff. Excellent. Thank you very much, Alex. And I agree. I think this is something that we're going to see a lot more of in the next while. I wonder, could I ask Julian if we could do one of our polls to the audience there. So we're just interested, just trying to understand a little bit about where the audience are from. So whether you're from the cyber world, from fintech, or from other. So we'll just leave that up there for a couple of seconds just to hear see where we're coming from. And then, Alex, I'm going to hand over the reins to you for a bit as well, if that's okay. So looks like we've got people from other parts of the world, other parts apart from just our cyber and fintech world. So that's really interesting. Thank you very much, everybody, for joining us today. So, Alex, I will hand over to you.
Sorry, what question are you putting to me there, Cormac?
Sorry, no, this is Simon. I was just saying that if I hand over to you hand over the reins to you for the next set of questions. I think we've got a little bit of yeah, okay. We'll move on with the next question, and Gillian, maybe if you could sort that out in the background, that'd be absolutely fantastic. Cormac, if I wanted to, if I could come back to you there, we mentioned very briefly before about you know, how you know, with Simon there, just that large firms take a long time to move and that small firms sometimes can be a bit more responsive. Do you think that you have an advantage in this world by virtue of being a startup? Your tech is being developed by a small coherent team and not being bound by any legacy systems?
Yeah, well, you know, there are certainly advantages and disadvantages of being a startup in this space. You know, as a startup, we're obviously constrained by a number of different factors. You know, people, money, time. But you know, we can use these constraints to our advantage, actually, I think. And we can tend to move faster than larger organizations with more people, money, and time. You know, decisions can be made faster. Which keeps momentum up and ultimately allows us to ship product faster and iterate quicker and improve things. But you know, as you said, you know, we're not bound by sort of legacy software and systems, which is certainly a big advantage. You know, the team does find it easier and more enjoyable probably to work on so-called greenfield projects. And we don't need to worry too much about, you know, breaking existing features because of a change somewhere else in the project. You know, and because of this, we can actually write a piece of code, test it, and release it, you know, all in the same day, which we have done at times. Having said that, you know, legacy can get a bit of a bad rep, but legacy can also mean established and secure. So there's a balance between bringing in the new and working with tried and tested technologies, you know, especially in the finance world. And I think that we've sort of struck a good balance of that. You know, we don't always follow the latest trend or technologies just because it's cool and might be a bit easier to work with. We like to see things that are tested, that are secure, and that are, you know, understood well. So yes, you know, we can definitely move quicker, but we also have to, you know, keep security front of mind and secure our systems as we move forward. And we've sort of internally actually adopted the move fast and secure things motto, which I think is quite fitting for, you know, registered or authorized fintechs.
Brilliant, and yeah, that does make an awful lot of sense. And you know, I know, having come from a very technical background myself, you know, we work with firms who you know, they do a release every 6 months of new software, and they spend a month of it building up to the release and then a month of it testing it afterwards. And you know, by that point you get, you know, less than half the year actually doing any work, you know, and producing features. Yeah. Whereas, you know, in your case, you've obviously got to balance that security with the reliability and the usability of the application. So you know, I think that's a really interesting way to go. Obviously you do have, I'm sure, legacy systems you still have to interact with. I'm sure some of the back ends of the open banking APIs that you're being forced to work with are you know, not as greenfield as you would maybe like, but at least you've still got those in place, which is great. Excellent stuff. So the next one I wanted to, the next question I had was again back to Alison, if I may. So I wonder if I could ask you about how have the regulator and other authorities been approaching the subject of cybersecurity with firms?
Thanks. So in the UK, the FCA will, for payment service providers, the regulations clearly directive driven. There's the EBA, the European Banking Authority, then produce guidelines and binding technical standards. But of course, the FCA is the regulator. The the regulator, the FCA, will test and check and ask questions at the beginning, at the application process, and a large part of their analysis of firms comes at that stage. So now it's not actual testing, it's not, and in some cases it's not even interviews, but it's very definitely asking for a large amount of information to be provided. And firms that fit into this sort of category, where they are AIS or PIS, account information services, or payment initiation service providers, who are going through open banking, therefore going into other people's systems, their documentation is reviewed by the specialist team. So there's questions asked at that stage to understand what the systems and controls are in place. It then turns to supervision. So when a firm's already supervised, the standards are set, you know, the requirements are set in legislation and from the directives and in the handbook, but whether firms are actually doing it themselves, well, that's a matter of confirming it, attesting to it in regulatory returns, or being able to evidence it if this regulator came knocking on the door, or calling on the video call as it is now. So there's a variety of requirements. It's then whether the firms are actually meeting it. And I think, to be fair, that's probably the area where a lot of you know, the supervision it's not as proactive in the UK as it is in other jurisdictions. So for payment service firms in particular haven't been used to having in-depth scrutiny and being asked the difficult questions, but it's changing. I think more and more the regulator, the FCA, is understanding that without having payments working properly, there is no financial services. You know, it's the bedrock. And so in recent years, they have increased the number of the number of people in the payment supervision team, and indeed they've introduced a rapid response team who are now looking in more depth. So you know, I think that can only be good news for the sector as a whole, because increasing supervision will raise standards, which will just make the sector more reliable and have a better reputation amongst consumers. All these things, you know, the reputation is so important. Something going wrong with one firm causes all sorts of questions to be raised with other firms, and you know, certainly in the non-bank sector, we need to see that we need to be confident that using a non-bank provider is as good as using a bank provider, if indeed not better.
Yeah, brilliant. Yeah, and I think that it's really interesting to hear that the regulator are ramping up their you know, the people that they have involved with this side of things. You know, I think that potentially we're going to start seeing a lot more much more technical people heading into this world. You know, yes, from the regulatory side, but also from the tech side. You know, actually gaining a huge amount of they get and ask for a huge amount of data, and in some cases, you know, is it actually understood by some of the people who might be in there? And I think that maybe we will start to see some hugely technical roles coming up in those places, so that the responses for IT audits can be understood.
Yeah, I think that's important. The FCA's business priorities this year published sort of right at the beginning of lockdown, so slightly adapted accordingly. Very much focus on the data. They realise that they have a huge amount of data coming into the building, and you know, unless it's being used and considered and analysed thoughtfully and properly, you know, they're sitting on a gold mine of information, and they need to be able to assess it and use it properly. I think you're absolutely right, Simon.
Brilliant. Thanks very much. If I could go back again to Simon and ask you about current data. So current data is obviously you know, many organizations have a huge amount of data sitting open or sitting around within their organization, and just wanted to kind of touch on the importance of reviewing that data before commencing a transformation journey, a digital transformation journey. Do you have any thoughts that you'd like to share with us on that?
Yeah, sure. And just on the final point of the last question there, working, our work with the regulator, we find them becoming a lot more proactive in terms of starting to ask for data rather than waiting for things to happen. They're very much getting there ahead of things. So I think there's a huge change happening there. And certainly the people we've been speaking to within the FCA and others, they are much more technical bent than they previously were. So I think everybody needs to be aware of that and reacting to it. And I think it leads on to that, onto your question, in terms of reviewing what people have, because that's where the challenge really is for a lot of organizations. But when we look at a lot of the recent fines over the last year or two for poor data management, quite often we find that it's because somebody has acquired something that was already in a bad state. So again, pointing to that legacy issue and how do we address that. So I think any organization has to be in a position where they completely understand what they have and are able to account for that. And there's things that you need to be able to account for. First of all, as an organization, you want to appreciate the value of what you have. If you are serving your customers and you're managing a lot of data about your customers, there's value within that for yourself. And that's a very positive thing that understanding your own information can bring to any organization. And we've certainly seen that in many cases. But then there's the risk element, and there's understanding what information you have gathered over time that introduces risk, whether that is a risk from a GDPR perspective, whether it's data that you should have got rid of but you've over retained, whether it's information that legally you shouldn't have either. There's many reasons why understanding your old world has to be a priority so you can actually move forward. Data is so valuable and so useful, but if you're carrying a lot of risk in your data, that can bring obviously a lot of challenge. We see a lot of organizations, typically when we analyze people's data, we'll see about somewhere between 60 and 70% of an organization's data is not validly held, or at least it's not held against the purpose for which it was collected in the first place. And that's massive, a massive risk. So going on a review of that information, understanding what you have, and then being able to wrap a policy around that. So as you look forward from a governance perspective, and when the regulator does come knocking in the door, you can A, show them the governance policy, and secondly, actually show them that in practice, in place, managing your data. That's the utopia of where people need to get to. The reality is just about every organization is failing on that last part. A lot of people have created the policy, but actually having a policy applied to information, I think, is the next big wave that people need to get to. And as I mentioned at the start of this question, when we speak to the regulators and they tell us, that they are getting proactive about trying to find out where policy is applied, not just that it exists, that's a massive opportunity and also a massive threat for organizations as they kind of look at that. And as consumers, Alison mentioned that the whole perspective around reputation is massive. And the reputational damage is greater than the financial loss of any fine ultimately. So again, if you are an organization, whether a fintech or a financial institution that's managing people's data, you should be more worried about your data because of the reputational impact of not managing it than you should about what the FCA or anybody else is going to do by way of a regulatory fine.
Absolutely. And, I think one of the interesting things there is to point back to something that Cormac mentioned earlier on about, working on a greenfield application, no legacy data and all that sort of stuff. That this is something that's very much easier to get right from the beginning and from the get-go, rather than coming in and later on finding that 80% of the data that you've been hoarding over the last 6 to 12 months is completely illegal or wrong for want of a better term. So I really appreciate that. Thank you very much, Simon. That's really interesting stuff. Alex, I wonder if I might come back to you there. Cryptocurrency is something that has been coming up a lot over the last while, and regulation of the same. It's a complex issue. It's been a complex issue in the past, one which is wrought with potential issues from a cybersecurity perspective. We've seen exchanges compromised, consumers' money removed by bad actors, with numbers totaling with lots of zeros on the end of amounts being stolen. What actions are the regulators taking to attempt to protect cryptocurrency customers and help it to become a more mature way of doing transactions?
Thanks, thanks, Simon. And yeah, I guess I knew someone was going to ask me about cryptocurrency or blockchain, or possibly both. But look, I think firstly, like most people working in the financial services industry would agree that more stringent regulation of cryptocurrency would actually be a good thing. If you look at the history of cryptocurrency and its usage to date, it's either been dominated by bad actors deliberately looking for an asset class that's untraceable, or it's been dominated by speculators who are purely looking to make large gains. And actually, the FCA put out some research on that point recently, which demonstrates that a lot of people using that currency or that asset class currency are purely speculating. But in my view, I mean, cryptocurrency has a much more powerful use case as a global asset class for let's say more legitimate purposes. But the banks have been very reluctant to engage because of the need to prove the source of funds. Where is the money coming from? And the banks need to meet their AML and KYC regulatory obligations. So actually, right now, it can actually be very difficult to actually get your money out of crypto assets into real money. So I think, again, I think further regulation is required, and regulation around crypto and proving the source of funds. In my opinion, I do feel that that's going to be inevitable. And that's a good thing because, as you say, it will help move crypto along in its journey to becoming a more legitimate and a more mainstream asset class, I think. I don't know, Alison, if you have a view on that.
Yeah, like crypto has, when I was in the SA as it was then, whenever crypto exchanges were coming to us and asking to be regulated under payment service legislation because they wanted the status, the sort of authentication of them in order to do business, and it fell to me to sort of field those initial questions and put the view back that it really wasn't falling under payment service legislation. But it always struck me as ironic that something that's talking about decentralization and needed of being authorized, and that's still the case. There, in terms of just it needs to be as Alex said, the uptake is significant, but it's still small in comparison to everything else, and it will grow and change, and there is so much good that could be used for it and distributed ledger technology. But again, reputation, as we've already mentioned, is the important aspect here. People need to feel confident, and that can be gained by the controls that they have in place and the evidence and avoiding negative stories, negative damage. And it's interesting, of course, that under the 5th Money Laundering Directive, these firms that deal with crypto assets at all in the UK need to be registered with the FCA. So now it's not regulated, it's not authorization, but it is registration. So there will be better data going forward about who's here in the UK and how that impacts on society as well.
That's brilliant, and I wonder, from Cormac's point of view, Cormac, have you made any kind of trips into the crypto world to look at loyalty from a crypto perspective? Is there any plans for that in the new versions?
Interesting question. It's something that we did look at, funny enough. But I think that a lot of companies were just tacking on, we're a crypto company, we're doing something blockchain almost for the sake of it, without actually really understanding how it works and whether or not it would actually benefit, what they're doing. For us, we found that open banking APIs were the perfect technology solution to the problem we were trying to solve. So there was no need to, add in crypto or things like that on top of it. However, I think it's a really interesting space. Really, I'm personally keeping an eye on it. I'm excited about it. And there might be some interesting use cases sort of down the line. But no, not for us right now, Simon.
Yeah, no, and it's an interesting thing to follow. The adoption of cryptocurrency is yes happening, but it's a very there's certain areas where there are more usage for crypto and things like that, which maybe you don't want to be offering loyalty rewards for, shall we say. So I have one final question which I'd like to go around to everybody, if I may. Just to get final view, which has just come into us here. But we've heard about the valuable personal information that's around, and the presence of that valuable personal information makes fintech companies increasingly attractive targets for cyber criminals. While a lot of fintech firms understand the importance of cybersecurity, given that the uptake of the new technology relies heavily on customers' trust. Is your experience that the priority for fintech startups is on driving sales, or are there resources available for secondary concerns, shall we call it, like cybersecurity? So maybe what we might do is just go through the panel again, if that's okay. So we'll start off with Alex and just see, Alex, is it your experience that the priority for fintech startups is on driving sales, or is there a combination there with cybersecurity?
Well, I think just to reiterate the point that Alison's already made, I mean, reputational risk is everything in financial services, and that's whether you're a fintech or a traditional bank. And I think the fintechs have to try even harder around that because they're coming from a position of no reputation, of no loyalty, of no trust. So I actually believe, that they're trying harder around cyber protection. They were the early adopters and embracers of these so-called RegTech solutions. If you look at RegTech as an industry, pretty much most of the fintech companies have adopted that within their technology. So I think actually they do care about it, and certainly the ones that I talk to, absolutely, it is a priority for them.
Brilliant, fantastic stuff. That's great. Thank you very much, Cormac. Could I maybe come to you next?
Yeah, I completely agree with Alex there. I mean, for us, it is, we have to be concerned about our reputational risk. And as I think I mentioned previously, if we suffered from a breach, that would be us done. Basically, I don't think we'd be able to come back at that at this stage in the company's life. So, security is and always sort of has been a huge priority for us. Of course, we need to focus on sales. And we need to grow as a company, but it could all end if we had a sort of a serious breach, or if we had a mishap. So no, I think that we have we're able to manage both of those priorities reasonably well as a startup, and I think many in the industry are in a similar position as us.
Brilliant, fantastic stuff. Thank you very much. Alison, how about yourself? Do you have anything you'd like to share with us on that?
We work with a range of firms, so I've probably seen both spectrums, both sides. We have the very fastidious, very diligent, careful, and then also those who, let's face it, they're entrepreneurs because they are looking to build a business, and that's their priority. And there's no doubt at that early stage, well, at any stage, there is of course competing demands on time and focus, and resources are constrained. But what will always worry me whenever we come to firms is whenever they're building up the processes are those that just, they're not paying any attention whatsoever to the details and the documenting and the putting the systems controls in place. Those businesses will not last, because if you don't get those fundamentals right, I just don't think you have the building blocks for a good company anyway. Yeah. But aside from that, all the legislation talks about proportionality. And I think that word can be quite often misunderstood. And so I don't think it's meaning that, when it comes to consumer protection, you're only a small, so you only have to be a small bit of protecting consumers. Actually, the standards are still the same. It's just that we're not expecting you to have a room full of people doing something to meet those standards because you have many rooms full of customers. You know, it's proportional to the customer base. It's not that it's proportional to your compliance with the standards and the obligations. And you know, that sends a huge alarm bell ringing whenever applicants come forward saying, you know, they're going to leave that to the side and deal with that later once they're authorized. That's not the right approach.
Absolutely, and you know, I completely agree. You know, in all worlds away from you know, fintech and financial services, you know, if cybersecurity is something that is done as a tick box exercise at the end, then I don't think it works. You know, from my experience of working with software development firms, if you you know, you call in a firm at the last minute and say, we're going to do a deploy on Wednesday for our first production platform, could you do a security and penetration test for us, and this is on the Friday before, then that's a firm that you're not expecting to maybe be around in the very long term. You know, rare exceptions, but you know, it's one of those things that has to be built in and baked in from the very beginning, I think. So thank you very much, Alison. That's brilliant. Simon, just yourself there as well. You know, kind of the priority around fintechs and cyber.
Yeah, I mean, it's interesting. There's two things, you know, as a CEO of a company that's been through all the stages over the last decade. There's two things that keep me awake at night: cash flow and security. And both are equal in that regard. Security is everything for us. Our customer base, you know, runs across, you know, the banking sector. We also historically have a lot of government and secure government departments as well. So security is in the DNA of everything we do. We used to be a kind of on-premise only platform, so there's this whole perimeter around our capability that meant it wasn't such a big deal for us as long as we were internally secure. But when we built DataLift and dropped it into a cloud environment, you know, the mind shift in terms of doing that, and the concern and the effort, I think the effort more than anything that we were forced to put into that security, you know, was so significant, both in terms of, and that continues today. You know, we have a team dedicated, we have very regular pen testing, as well as the many pen tests that our customers do against the platform as well. So it is absolutely a dual priority, and it has to be for any fintech, in my view. And I think there's ways to achieve that as well, because when you are, you know, a young fintech, it can be quite daunting when you think of what you need to do, but you can build upon the success of others in that regard using other platforms. We built ours initially and solely relied on the Microsoft stack in terms of the security layer that Azure was providing for us, and that was fantastic. And over time then, we were able to bring more bits in-house, but we knew we had a very, very sound platform to build upon as a young, you know, when we were coming out of the stocks with it, and then ultimately build upon that. So yes, security is the highest priority I think you can really have, especially if you're a cloud platform. Reputation is everything.
Absolutely, and you know, one of the useful things, as you mentioned there, that you've been able to do is to, you know, think about the you know, shared responsibility type model. So you know, that's something that is you know, you don't have to go out and build a data center and put somebody with a gun outside and you know, CCTV and build it all yourself. You know, you can take advantage of some of the technologies that are there already. You know, Cormac is I believe an AWS user. You guys are an Azure user. You know, these technologies are there. They have some really, really brilliant security technologies in place to help us out. So that we're coming up on the hour there, and you know, I'd just like to thank the panel and say thank you to everybody for joining us today. Thank you to Alison, to Simon, to Cormac. I'm going to hand over to Alex now as well, just to say his goodbyes as well. But from my side, thank you very much. And if you have any questions, please feel free to contact either of our organisations or any of us in any way that you feel fit. So thank you very much, everybody, from my side, and I'll pass over to you, Alex.
Yeah, thank you, Simon. And look, really just echo those thanks to our panel. It's been a great discussion. Thank you, Simon, for your excellent chair. I don't feel I've been much of a co-chair today, so thanks for the opportunity. And look, just hopefully it's the first of many collaborations between FintechNI and NI Cyber, and you know, they are such interconnected issues, cybersecurity and fintech, and I think the discussion today has just proven that. So thanks for the opportunity.
Brilliant. Thank you very much, everybody, for joining us today. Thanks to Gillian for running things in the background there. And we will look forward to speaking to you all again very soon. Thank you very much.